See that on AO World shares. High above day highs. Would be real nice. Rolls Royce 95 to 106. Cineworld 48 to 57. I feel like this is just fear selling then by the looks of things. Well, I'm sorry that we had an issue with the stream. Apologies, guys. But everything's back up now.
Welcome back to another.
Yes.
I'm sorry that. Welcome. Yes, perfect.
Oh, I forgot to do the introduction. Boom. Welcome back to another Quantium Research live stream. I'm your host, Ryan Kia of quantiumresearch.co.uk and now Quantium Research Limited. See how big that sounds? Very big. But we have held our AO World position. I'm quite frustrated because I was trying to buy them, but I had an issue with the sound, so I had to reboot my setup because sometimes it gets like that. And I cost myself probably £60 more equity in these guys. Unfortunate, but we don't think it does a P&L. It would have been points. It would have been at least 15 points on 400, but now so far it's 8 points versus all the else would have been there 400 versus bid now at 408. We're in at 383.5 from a couple of days back. And if we look at the market right now, things are going crazy. Rolls Royce went all the way to 95 pence a share. This is kind of Black Monday equivalent for the markets, but market's only down, 1.2%, something like that. I wouldn't really say that's a huge one-off crisis event kind of thing, but hey, what do you expect from this market? I guess this is what people think a crash looks like. But anyways, what I'm going to do is I'm going to tweet, we're back live now. I'm going to delete my tweet from earlier. I don't like deleting tweets, very the opposite of being transparent, but just for the sake of a link will be broken to the wrong stream, so I'm going to let's see, we're back up now. Catch us here. And the link, EasyJet as well. The whole sector's had a similar kind of move.
Easy.
Gonna mute that. Our audio's all good. Turns out folks couldn't hear us, but we're back. We're back now. Alright, so air is chill, relaxing, nothing special on that front. 410. I just don't like how there was an anti-beta effect kind of draining. This is not what I've researched on these guys, but it's only one session. We need a couple of events similar, and these don't happen too regularly, so it's quite difficult to get another sample. Still, it's overwhelmingly positive. Down for the day. I have to check the index and then check my system with that latest input based off the time interval. Let me just pull up index here. What a future that. That was a 50-point recovery in no time. Let's give a couple more hours, probably. EasyJet. Clear attempt to try sub 695, but filling gap is probably what you'd expect, or an attempt at a shorter term time frame. Trying to claw back some of those losses. Cineworld though is quite static, so to see it drop was very interesting. I think normal kind of system, sub 53, drain, intraday trial at really getting shorts close, and then shares probably up. So that'll be an interesting one to try and navigate. See how many on an ass gonna buy. Type similar here, half a penny. Alright, well, welcome back to the stream, guys. I apologize. I had some issues with the sound, but we're back. And it seems there's been a battering across what you'd call quote-unquote value stocks. The only one that stands out on my list is, I was going to say Peloton, Pearson at 666. Yeah. Yeah, there's about 30 points. But it takes a couple sessions. There's too much vol risk. Just trying to hold that point. Yep. Let's go tighter, see if there's enough vol for us. That was on day lows as well. Huh. Oh, okay. Well, I hope everybody's doing well. We're just looking at some shares right now. That sound in the back is me warming up the kettle, if it's coming through. Rolls-Royce at 103. Just a quick update. Obviously, we opened AO shares at 383.5, where we believed there was a break, a retest towards potentially recent highs and beyond. My strong consensus is there, but I'd have wanted a day where AO is probably testing highs on this session. That's irregular behavior, but then again, it can still do that over a couple of sessions. 15 points fall, 0.25% fall on the index. It seems like it was trying to regain and then gets dumped. That's what I'd assume. Shares on Rolls-Royce as well has risen at 104.5, so really below it's a little waterfall. And I remember 89.95 was a good one. Yeah, ironically between two kind of important points. But the fact that it held this important point 95, there might not be enough in there. Sinner sub 53.5, I'd probably take a crack at day lows. If not, yeah, far too much spot. Kind of a 5% risk for 10% reward kind of opportunity. Wouldn't like to hold that overnight though, so it would be intraday kind of action. AO 410 right now, is that the ask? 410.5. Let's check here. 410.5, 48.5. That's relatively strong with the index dipping, but I kind of want index to fall slowly, this regain, become positive. That would be a nice setup for the day. All my research on these guys points to it, but the open, whilst I expected a little drop, it's a bit more than what I expected. Still, range of worst case scenario, 395. It didn't even do that, 396, so I guess that's good enough. We want to watch closely to see how this anti-beta nature plays out. The difference between AO's shares and this particular index we can see here. If I plot them on the 1 second, I'm not sure. On this account, I've got live prices for the index. I might do. Let's have a look. I'm going to copy this. Obviously, it's not the FTSE that is the index for AO. It's the FTSE 250, the MCX. But I did my model based off this. I know it's weird and selective, but it yielded some results. Interesting results. But are they playing to the truth? Let's see. Yeah, I don't think there are lives on these. I think I needed to get them separately. Shame. Double check. It's got a minute candle, because we can actually do seconds with TradingView Premium. I really am not sure if it is live or not, because all our live prices are for the stocks we trade. So AO World right now, 410 was the last trade. And if we look...
Hey folks, in this video I want to show you something pretty...
Quick video, accidentally I clicked onto that. AO World was 410.55 on ask. I assume 410 was someone buying. Now, let's look across the market. spreads as well are important to look at. 0.4% on Cineworld. That is the kind of action we like to trade, but there's an issue with the float that I need to sort out before I even press trade on these guys. Yeah, I don't know, it's not ideal. We kind of like to short a breakdown with a little attempt at trying to regain the areas lost, but then that means break above high of open, relatively positive action. Usually on these kind of moves, especially in the FTSE and relevant indexes, you see a huge flash down on open, an attempt to hold ground, holds ground, flashes up, back down, fails a couple of times at trying to break out, and then eventually you see a relatively flat day, so the index doesn't end up making losses. But there's some fundamental basis to what happened today. Most cities that were in tier 3 before, I believe all of them actually, who were in tier 3, have now gone to tier 4. So London, in the lockdown system that is going on right now, the shambles that exists, London has gone into, well, I'd say a third lockdown, because we had the lockdown before in March, then we had the one that was a month closed, and now we're probably having another one. Restaurants are going to be closed entirely now. The second one, I think it was closed as well, yeah. So you can only order food from a restaurant, which you normally don't like to do. You'll order food from a place that you normally order food from, not, I don't know, a high-end place and eat in kind of thing. So I assume the government's going to try something similar to the Eat Out to Help Out scheme, a program they launched a while back where they had 50% off eating in at restaurants after the lockdown had finished to get people back into the whole retail scene. Now, the government closed down 2 times after for at least 2 months, I believe. This is what the total will be if, say, we're closed down for another month. But some say we'll be closed until April, which absolutely kills the whole sector. What's the government going to do? Just throw money at them? I assume so. And that's why you end up losing if you short these plays on this kind of news. But hey, what is inflation? I'm just going to make sure I can access the chats too. Okay. Welcome to the peeps watching us. Royal Mail's at 321, trying to regain some of those losses. Ooh, AO as well isn't doing too well. Yeah, not the ideal circumstance for us. I think that would be a good opportunity to check up on RMG right now. Yeah, so they're trying. It's obviously cheap on the hourly format. What we wanted to do with these guys was we wanted to short Royal Mail at literally around here, 330 or so. It's 321 now. Our immediate strat would be to close partial and re-add that partial on a retest. 329. The problem is a really important point that needs to not break over. So that would be odd. Reorganize some tabs real quick. Alright. The spread's okay. Yeah, 0.01%. 0.02 maybe. I'm interested to see what everybody's looking at today, because obviously my focus is on AO World, and we're in from 383.5 a couple sessions ago. We believe it's in a full-blown breakout. This is still healthy trading. It's just upsetting that with the index down, these guys don't seem to stand out. But what I want to do is pull up a separate tab on my other screen and see how the overall index has done. At least I'm going to look at the FTSE 250. Maybe it does stand out. I should add a sample for the FTSE 250 to make it a little bit easier to track. Let's see. FTSE 250 is down even harder. Yeah. Who stands out? Oh, I wanted to revisit TUI at some point later on a financials perspective. I think they're a worthless company, and I will say that with my chest. I just don't believe it's a great company. The only reason why they're doing well is because of this whole COVID bailout stuff. They got a 2 billion or 3 billion euro loan from the German government. That is going to probably be down as one of the worst loans. But they can hide it as a COVID required mechanism to save jobs. If you really wanted to save jobs, you'd allocate those employees to better firms and more efficient, help them grow kind of thing. But obviously that's not fair. It's only fair to throw money at a dead horse. Okay. Yeah, 330 retest. If I was trying to go short on the break below 330, then I kind of want it at 330 again. That's fair. I can't see many things wrong with that. And it still maintains trend. Yeah. My risk. Clear on 342, but 340 would be smoother. Yep. So if I can get 330 again, I'm short, and I'll ride that. 3.5% risk. I'll put that in my model later. But for now, we're monitoring. Add alert real quick. Once greater than, yeah, 328 could be a place we could do it as well. Kind of clear at 328 to 329. So I'd say 328 for a point where I'd figure it out. So above 325, consider short at 328, 329. Consider short 320, 329. Okay. What do I want? More notifications for a minute. 30 seconds. That's a doo-doo-doo. Yeah, let's get it scary like that. Whilst the whole formation could play out if it kind of stalls here, falls lower, I'd like a little bit of a false kind of attempt to regain some ground. Where's that notification? Oh, it's just in chat. Private chats. Can't open that then, can I? Okay. RMG. That's going to be our alert. I normally don't set my alerts on this account, but I should probably. I'm going to keep these just for ranges. Where's McDonald's at? That one hurts. Well, still. Not interested. Is that correct? The index has clawed back some gains. I think this is live, just there's a couple points difference. Must be a different contract. Yeah, there's that break we want. That should push these guys. A couple short candidates a little higher. 322 on ask as well. Perfect. Do I have a calculator nearby? Using my phone. Sounds good. I'd say minimum worst case, we make 16 points, let's say. Obviously it could be much lower, but 16 points, and we're risking 12. Not great, but obviously the downside's much better. I'll revisit shortly. I'm not planning on selling the AO World position right now, but It's just interesting to see where it closes today. So we won't be looking at this every minute. It's not healthy considering my targets are much higher. It's more an investment than a trade, but it should have somewhat of a momentum correlation. But correlation is not always causation. Correlation doesn't last forever. Cineworld's recovering. Rolls Royce is recovering. Pearson's recovering. I think Shell or BP took a hit, like an impairment or something. BP 5%. Okay. How about the ETFs? Which ones are open? Most of these are US. I don't really use them for this portfolio, but when I use models for macro stuff, these are what I'm looking at generally. And yeah, I could just put them in order, saves time. Taiwan is up versus previous period. Gas. But the worst ones, Russia. Probably oil link, because 3% drop on oil today. The Islamic Emerging Market ETF. ESG screened ETF. And that's World ESG. Must be doing great if you look on the daily, right? Not too great for that period. Let me double check this. Okay. Was there an ETF pre-corona? So the world ESG ETF is quite rubbish, but if you have a really specific set of 3, 4, 5 companies, you'll be in good hands. One letdown was Alibaba. Too big to grow rather than too big to fail. What else? Jumia. They're closed because that's US. Same with S-Wave. I wonder. Index has recovered a fair amount of the losses already. What you normally expect. Is it towards that we're going to be relatively neutral on the day? And then you're going to see headlines of Christmas rally. 1 day drop before Christmas rally. Damn. AO's back to those lows as well. On this setup, I wouldn't be buying again. So I just have to let it run, unfortunately. Because it is an investment. Bigger ranges, but I'm not comfortable taking below really near the bottom. Actually, I could be running it, but it's running a dead horse, so yeah. We'll give the session to play. And with this stock in general as well, the majority of its daily moves are made up by a couple minutes of action. It's quite illiquid in that respect. Hedge funds, all that stuff. Make slow moves with these guys. So whilst I didn't expect anything huge, I didn't expect it to be down. Growing betas, eh? Really is something. Oh, I keep forgetting my coffee. Probably gonna make a tea instead. One sec. I'll turn my video off and I'll be back in a minute. Okay. Andre's here. 5 minutes ago. Oh my god, it works. Jeez. The stream is back now. Fix the audio. How you doing? Hope the trading's going well. It's all good, Andre. Appreciate you, man. I'm just gonna pour myself a tea real quick, and I'll be back in probably 30 seconds. How are things on your end? Oh my gosh. That was a bad idea to pour it on myself. Oh. Okay. We're back. Let me fix this camera. Alright. Boom. Chilling. What's going on this end? It's trying to hold that 404. Well, so I thought I had this stock cracked. I thought today index would be down hard and this stock would be up hard. But actually the index went down. These guys went down with it. Index recovered a little bit. These guys have actually sold off. That's not a nice move, you like. Index as a whole moves like crazy. Yeah. Break above 20 points higher from here, then it's probably like this never happened. That's a crazy one, eh? Well, jeez. Yo, Andre, what time is it over where you're at? Shout out to the Calgary folks. Just watching the ES futures overnight here. Yeah, they must be going all over the place. You'd have thought they'd be dumping hard, and then now probably recovering as the usual trend is. We've had a couple of stocks here. If I switch out from RMG to my normal list of favorites to trade. Rolls Royce at 106, down to 95, up to 107. Cineworld down to 47, up to 57. I assume they're going to probably regain ground if the index permits it. GKP, oh, this one, that's going to hurt. Oil sub 50. It's going to whack them. They're still in trend. It's just you normally get crazy drawdowns. I assume people are spooked right now with the amount of impairments across these kind of stocks. That's one thing that was holding me back, the impairment scene kind of thing. But I still think it's a great company. In terms of the oil sector, it's probably the best of the mid-caps, smaller guys. And I do regret not buying them when I was going to try and trade them. As an investment though, 3-4 year horizon, great. If your fear is with impairments, they could happen, could not happen. Depends how your accounting perspective is. For me, it's possible, but I am an optimist when it comes to accounts and managers, but not in that respect. I don't like how management write things, but you can't always trust what they do. But you'd think if they own shares in the business and they got skin in the game, they want the business to stay alive, they want to maintain their wages, they're going to produce well-produced documents, not poorly written ones kind of thing. Oof, that is not nice. Imagine if we have to give up all our gains here. That wouldn't be too pretty. Okay, I remember Andre said 1:45 a.m. What do you think of LSE OBD? OBD listed on the London Stock Exchange. Is that new merger? Oxford Biodynamics. I've heard of these guys. Weren't they like nothing a very long time ago? No, wrong company. I actually don't know much about them, in all honesty. What do they do? How come you're looking at them at the moment? Very choppy. Every pharma stock basically moves like this. It doesn't excite me. Because they probably give net. Oh, Metro. We were thinking of shorting Metro at 138. I lost focus. I should have set an alert. Wow. Because there's no way. It's at 150 for open. Worst market day as well for that news, unfortunately. Wow. It's still up 7%, but that is a drop of roughly that from the opening price. 20% spike straight out. Some people are trying to get out of these guys, and that was the liquidity they needed. Spike in selling pressure. As soon as that price is down. Wowza. And the index. Index recovers a fair bit. My prized sweetheart is down. Let's have a look. In terms of the FTSE 250, who are the highest fallers? 6% gets on the top 10. So these guys are halfway there. That'd be a huge L. Risks of sellers, but I don't think I've ever seen such price action. No. If this is the case, we're returning to 364. But I can't believe it. Can't believe this one. I've had similar sessions. Such primed activity. Very unnatural. RMG's not recovering. Metro's wasted for a potential op. Okay. Andrea says it's a bit of an oldish one, but my butts is in it from pre-IPO. But it's not that hot now, so who knows. Was it the IPO back in 2017, like 3 years ago? Or were they listed elsewhere? Did they switch over to the UK kind of thing? Because I don't know. Medical companies, man. The bigger ones, great opportunities right now. But just the smaller folk, they burn cash like crazy. Absolutely mad cash burn rates. Wasn't that pretty? Oof. Jeez. It's not good to look at this because the next move isn't so pretty. Just want to reevaluate always whenever we can. Yeah, I'm raising my stop from the 340s initially. Well, I don't have a stop in now, but I think 340s initially where we had. We can risk to 370, maybe. Which doesn't lose too much. Loses about 13 points. Loses about what we're up now. But the reward potential is a huge, huge return. 30, 40, 50% higher than now. We just need a catalyst. Which would have been that anti-beta. Because there's no earnings for a while. A trading update obviously is going to be positive with these guys. I don't know, I'm not well versed in the fundamentals. Yeah, man, but obviously the technicals aren't that pretty, the stock, and the fundamentals aren't, the drill. It's probably not a place to go. Cineworld recovering a fair bit. It's such a textbook TA stock. Whilst it would have been right to go long, I don't think these guys can live around long, even with the news from the company. They have a habit of lying. When managers have a habit of lying, the stock price doesn't tend to perform so well. Well, not a pretty start for us with AO. We're down about 150 versus the last session. But we haven't actually traded anything, so this is just on the investment perspective. which still puts us up about 126, take away 20 of fees, so £126 on top of what the funds figure shows, which is nice. This is on the 10 kpf. It's nice to live stream. I saw the other day people were posting P&L figures of, oh, I'm up this X amount of dollars or whatever. But the truth is, you can do that and hide your losses and still be losing money as a trader. So I think the point of this 10K series, whilst, I could put my entire portfolio, I don't have the ability to, track them, make videos every single one where I hold them for years. It would be a very boring video. So I thought I'd allocate an amount of capital where I would have I try and split up my daily system of, okay, I have investments, I have longer term trades, and I'll allocate a certain amount of my own capital to stocks that I would maybe trade, and hence why I have a CFD account open in this case here. And I put 10 grand, and I thought, okay, I don't need to touch that money for 2-3 years, and I want to see maybe in 4 years, depends the duration of study, and I can make it a thing where if people don't want to trade for the day and they want to watch someone else trade, keep updated with the market and what's going on, I can create content to do so, which is real nice. And it's real trading, which a lot of people I'm sure would appreciate. Many who post, I'm up this much, I'm up this much, I'm up this much, use demos, and they have an internal battle between themselves and their egos to accept that they can't actually trade, so they have to sell a dream. So with these streams, if I blow the whole account for some reason, you will be able to judge me as a bad risk manager. Oh lordy, bruh, then I'm the president-elect and I'm up $10 million in this quarter alone. Yeah, I'm pretty sure. Andre Biden. Yeah, you see, I've seen people on Twitter especially, they get thousands of likes as well when they post, I'm up $178,000 in the day, 300% up year to date and whatever. I don't know, I don't like posting much about year-to-date returns, even though my returns are quite good, is because I just think showing your returns doesn't help the community. It makes people who aren't making money feel bad. It makes people who are making money just agree with you when they shouldn't agree with you. We should challenge the elements that didn't work. So we should post risk metrics. I think that's a good thing we're going to do with this series as well. We're going to look through the analytics maybe once every 6 months or something and see how we can improve based on the elements I can talk about my system. How can we improve our average winners and decrease our average losers? Do we need to change a couple of variables here and there, kind of thing? That'll be a super cool thing to do. I think trading psychology, right? When people talk about trading psychology every single day and say, trading psychology, you haven't cracked that you actually have to change yourself first within. But there are some people that say trading psychology is useless, and I disagree. I think that if the reason you think about normal things in life influences the way you trade, then you need to either change the way you think about things in life, which might be quite difficult to do, or disassociate yourself from your normal way. Kind of the work-life balance thing. When you're working, you're not relaxing, living life and all that. You're working. So you have to be in a kind of stealth mode. I need to just pull back and turn something off real quick. Be back in a sec. I thought I turned the kettle off. There was no water, yet it was boiling. So I had to attend to that. Trading psychology, yeah, big thing indeed. Andre aka Global Market Signals, says the scientific method applied to risk management. Yeah, I mean, whilst I say a lot of the times don't have any emotion in your trading, the emotion you should use is the art of discipline, to put yourself into an approach that is steady. Stop thinking about, I had a great day, I'm going to go celebrate, I'm jumping about really happy. Or I had a really bad day, I'm just going to go in my bed and feel bad about myself, force myself to be unproductive, I don't know, watch a bunch of TV series and just let myself lose that money and then, oh no, next time I go, I'm afraid to press trade. You shouldn't think about that. In fact, if you lose money, I was listening to someone talk about it in a podcast earlier. If you lose money, you should be more inclined to fight against what went wrong. Not to trade, but to fight against what went wrong. Look back and say, how can I improve my method? How can I prevent myself from having these huge one-off losses? Why did I have to be so overexposed or maybe underexposed in a trade that went well? How can I improve that? Overall, by addressing these issues, you're able to improve your returns. And not only improve your returns, but improve your risk-adjusted returns. You don't have to take a whole amount of your portfolio risk into one position, make a lot of money, and then come out and say you're a big trader. You can't do that, because then you're going to put your whole portfolio in another stock, and eventually it takes one blow up to lose everything. I remember somebody told me back when Tesla was about $300, $400 or so, Tesla's going to $1,000. I thought, that's very unlikely, but I'm not shorting the stock, I said to them. And they texted me a while back and said, you're so wrong and all that. And I said, yeah, I was wrong. But they had not just 100% of their portfolio invested, they were actually using leverage. So it was like 140% or something. So when the shares went up, yes, they made a lot of money, right? $300-$400 now. What's the equivalent? $3,000 pre-stock split and all that to now after the conversion. So yeah, they must have made a bit of money. They sold around 1,000 and then just left some for free one, which was smart. But the exposure was way too much, because what if they bought more, said, all right, Tesla's at $3,000 equivalent now, it's probably $3,500 equivalent now, but which is $700 pre-stock split. Now, these guys, if they bought after 1,000, they made a lot of money, sold out, and then they bought a lot higher with all their size, maybe even exposed again, and you lose 50%, you lose a lot. You lose a lot of money. Then you do that in another stock, you end up losing not only your money that you put up and your profits and all that stuff, but you actually end up owing the bank money sometimes. With most retail accounts, you can't do that, and you get closed out before. But if a stock suddenly suspends and never comes back, you're stuck with the shares and you owe your balance. So if you can't cover it with your existing cash funds that are on your balance, then you owe money. That's where you get bad credit. You can't borrow for, say, an investment property. You can't even borrow for a car if you want to go on finance or whatever. And your whole financial situation starts crumbling because you were greedy, because you wanted to make some fast money by doing nothing. So when folks look at guys like myself, very slow generally now, we don't have huge exposures, huge risk at some point. To me, a huge risk is probably a couple of percent either way in a day, just more than what I'd expected. That's what I call an internal tail event. But, when you see stocks moving 50, 60% like the AIM did, AIM stocks and stuff, alternative investment stocks, aka the UK's equivalent of penny stocks. Those, I'd started in them. I remember buying into a company called Extract Resources a couple of years in, and they raised money, they diluted, and their shares went to, I think, they just dropped 33% within 24 hours of me buying. And I just remember looking there. It wasn't huge money because I didn't have that large of a portfolio. I was about 3 years in to the 7.5 years or so now where I've been. Yeah, July 2013. 7.5 years of now being involved in the markets, actively investing my own money. And I just remember thinking, damn, I lost that money so easily. Most investors of large size like to make at least 8% a year for market returns to beat the market, which is beta, and generate alpha, which is excess returns on top of the market rate of return. Now, I think I'm okay with lowering those returns as your size as your size grows, because if you're earning, say, 30, 40, 50, 60%, it's below 100% even, having fair amount of exposure at time, nothing too excessive. You can sleep well, you can wake up the next morning, and even if you overslept or whatever, it's not really going to make too much of a difference. Well, you shouldn't oversleep, but if that makes sense, if you do, worst case scenario, you had a whole lot of work or whatever, you were tired, then your body didn't wake up, you missed your alarms, you don't need to worry. With people who are over leveraged, say if you're using 50% more of your portfolio or even your entire portfolio on one stock, spikes down 10% next day. If you're trying to trade and make only 2-3%, you've lost 5 potential trades just from slipping out of your schedule, not being disciplined kind of thing. So have a look at the chat. Yep, either way, anyone who trades will end up learning so much more about themselves than they originally thought. I agree. I think trading and investing really, because they're two different areas, but there's a kind of thin line of classification between them. I think this has taught me really more about myself, has helped me develop myself as a person. I was generally very, very fearful as a child. I don't know why. I just was. That was my nature. And now, and I was probably careless as well. I wouldn't really care too much about the consequence of a certain action. Not something extreme or anything, but I probably wouldn't do, say, homeworks on time or something like that, and I wouldn't meet my obligations in time. Well, now I'm very, very cautious and careful. I will take a couple of extra hours out of my free time, the very little free time that I have already, to make sure that I can improve my process and reduce my risk as much as possible. So, GMS says, yikes. Yeah, for the loss I made on extract, I'm assuming. Yeah, that was a funny one. In fact, it was a kind of clear thing. If I was looking at it now, I wouldn't go there at all. But you have to go through the tough times to come out the other end a winner, or not even necessarily a winner. To come out comfortable having learned something, you have to have seen the worst case scenario. Otherwise, I could tell somebody, hey, don't use too much leverage because you could end up losing a lot of money. But they're like, what is a lot of money and what is too much leverage? If I tell them, they'll still be like, okay. Then one day they're in a trade, they really believe it's going to work out for them. They increase their leverage, and boom, they go out. They lose a lot of money. Especially in the illiquid companies, it's very dangerous. AO World, for example, today, you could have that same thing happen. Not lose everything, but still lose a lot of money from just believing it too much. Like I believe AO World is worth a lot of money, more versus what it is now, say in a couple months' time. Today hasn't showed it yet, but I still believe it. Now, I was going to add a little bit for the trade and then get that out and keep back to original size, which I could have done. I'd have made probably 2.5% kind of thing. Oh, the Tesla YOLO Wall Street boys. Yeah, I know what you mean. There was a guy, I think his name was Control the Narrative. We call him Guh, G-U-H, because when he opened, I think he had some puts or something on Apple stocks, and I think he was selling calls. I think he was selling calls, yeah, because he lost much more than he had. And the price suddenly spikes like 10% on an earnings call. And his reaction was like, look. He was gulping, realizing he lost, was it $16,000 or $160,000? Something just ridiculously large. And that's crazy. I think Robinhood's very dangerous, especially in the US and any other territories that seem to be using it. This whole options game and all that. I normally use options for hedges, but I would like to navigate them further, because I feel like someone who's seasoned in a way has used it for user markets, been involved, managed their own portfolio for, say, I wouldn't say a set time frame, but let's just say 5 years at least or whatever. They will be able to have a rough understanding of how they can manage risk. Because if they haven't blown up in 5 years from being a regular trader, not an investor, but a regular trader, then they'll understand. But you have to understand the optics of the difference between just going long and short, and then how you can lose more money than your initial investment selling puts or selling calls. If you buy or sell puts or calls, then the premium element comes in. Why not short the shares if you think they're going down? Do you not have enough money? Then that makes sense. But then if you don't have enough money, you shouldn't be doing anything other than buying or selling puts or calls. Sorry, buying puts or buying calls. Anything else is very dangerous kind of thing. But apparently in the options market, if you're trading regularly, the best way to make money is to be a net seller. Anyone who trades them, correct me if I'm wrong. This is not from my own experiences, but this is what I hear. Because for hedging, it doesn't really matter. Box spread vibes. Let's see. Lady Luck is affectionate to those people, I can imagine. Yeah, Tesla. This guy was buying the shares with leverage, so he was going long. And he made a lot of money. I don't know what's happened. He must have made a lot of money, I remember. He was in a tough financial spot. But you don't buy shares to make a quick buck if you're in a tough financial spot. That shows a lot about your financial competence. And I wouldn't suggest it to anyone who wants to make quick money. If you want to make quick money, buy and sell physical goods. That has a risk. But that is quick versus really anything out there. Starting a business, trading is essentially like that. You have a lot of turnover and you're trying to make as much money from that turnover as possible. Here, the turnover is measured using the term gross exposure, if you've ever heard that before. That's what people refer to. Gross exposure, the amount of money exposed on trade. So for example, AO World, we opened roughly £3,500, and that is the gross exposure for that trade. You add it up, you work out and see. It's kind of like a net margin of a business kind of thing. It's not too much of an importance for traders, but it's an interesting thing. I think so. For managing your risk, for sure, says Andre. But for trading, remember to smack yourself with a hammer beforehand, because you need a personal relationship with Lady Luck to trade options successfully. I got a friend that trades options successfully, and he makes a lot of money. He's very active. He uses a lot of time, but he does make a lot of money. I'm dumbfounded when I see such things, but it's very nice to see people winning in such a dangerous area nonetheless. I bet you the rate of people who can actively make money on a regular basis is much lower than it is with anything like shares. Leveraged accounts, obviously, you get lower rates of people making money, doing well and all that consistently, because you can make money on CFD, close your account, but you might as well open a betting account, have a couple lucky bets, close that, boom. You've made money. That shouldn't count towards a statistic. People through, say, 2-3 years making money, that shows. You know, if you're a full-time trader and you're losing money 2 out of 3 years, 3 out of 4 years, you know, you're not a full-time trader. That can't be your living. Because some people, they trade so actively, they have so much capital up, let's say 100,000, 300,000, some in millions, and that capital is used to churn as much capital, make 1 or 2% gains on small moves where, say on the intraday basis, you cancel out the open, cancel out the close, and you're just trading the meat of the move kind of thing. And normally you have the ability to kind of trade, say, 3% of a 7% breakout kind of thing, or 4%, and then make enough money to put bread on the table and grow your portfolio at the same time. Not my ideal approach, but it's quite smart. I'd prefer to invest with smaller and not have to check every day, be more comfortable, and have a trading allocation as well of both a portfolio and a separate trading portfolio too. But it's up to you what you decide to do. Ooh, cable's not doing too well. 1.32 apparently. Or it's near 1.32 in terms of my thoughts. It was 136 very recently. Apparently there was a new strain of COVID. Ooh, if we're seeing a pullback on the FTSE, which we are now, I'd expect sell-off to be brutal towards the end of the day. Mad one indeed. Very upset that the index has been beaten and AO isn't up, because this should have been up. It means we might have to risk our gains, but it's cool. We see higher. Look at that glow up there. Some action. You'd expect it to try and fail. But where we opened is a clear point where it should hold. Huh. That's some vol though, look. You reverse that setup. 377, 338, 333. Never put anything past these guys. Just because we're in, you can't all of a sudden say that things are going to change. But this is very rare, so that's nice. Just don't like the action. Ooh, a couple of folks on YouTube didn't see that. S-Wave's a cool one. It actually might be breaking into new all-time highs. We didn't see that before. We wanted 73, 79. You can't actually short these guys, by the way, anymore, which is unfortunate. Jumi as well, 42. What, almost double where we sold it out? That's gonna hurt. GKP, I assume Oilers dumping, 109. That's not pretty at all. No, a lot of people are invested in these guys for a potential recovery. Failure isn't pretty. Yeah, I'm hoping AO holds. Got a tweet. Wow. Oh my. I completely forgot about this as well. Ray Dalio, one of my favorite guys in the industry, and he's just a great person as well in general. His son passed away in a car accident. Imagine as a father having to deal with the passing of your child. Prayers and thoughts are with him, and I hope we all show some love to the guy. Bless him. Because, you can make money, you can lose money, but family, that's the most important thing. Wow. Very sad, very sad. And it's so humble of him to say that we know that the terrible pain we are feeling has been and continues to be felt by so many others, so our sympathies go out to them. May God be with you, and may you cherish your blessings, especially at this time of the year, just before Christmas as well. He's not talking about himself, he's talking about other people. That's a good human being. I don't know why people say bad things about Ray Dalio. Loki is one of my idols in the industry, I think. Very inspirational. Some of his writings as well, amazing. Principles of navigating big debt crises, amazing. Let me think of another one. That one he wrote about interest rates going to basically zero was so eye-opening. Amazing guy. I hope he stays strong, recovers, and has all the support of the community as much as we can. Terrible situation. I wouldn't know how to react, man. I wouldn't. It would break me, man. Family is so important. A child. 42 years old as well. You'd seen him grow. Very, very upsetting, man. But prayers for him. Something I can't do. I need to take notes from him in regards to options. Yeah, this friend of mine who trades options. Very smart guy. He's US based, obviously. $60. Okay. Yeah, so this is not looking to turn out as we'd wanted it to. Why is AO getting dripped? That's the problem. It is super, super volatile, so we really, what do you expect after a 20-30% rally? Very unfortunate. GKP's breaking. I wonder how the community's coping with that. I know a lot of people are long. Zoopla has said house prices are up 3.9% on the year, with £62 billion worth of additional deals in 2020 versus the year before. Pandemic? What pandemic? Wow. Well, we had, what do they call it, stamp duty taken off. That obviously increases margins for people to invest. Folks making money in the markets, putting their funds where you can get easy returns without doing much. Property. You just maintain the property. That really is the only major cost. See what's going on with GKP. Did it hit 136? No, it didn't. This is not consolidation, that's for sure. Goldman turns bullish on oil. That means nothing. Because Goldman has different sectors. Different analysts. Some are bullish, some are bearish. That shouldn't be an investment thesis. And just because something falls 10%, you shouldn't panic. Trend is scary. And the fact that the index hasn't recovered this partial loss of a day probably means continue to fall towards the end of the day and then below lows, if anything. It's mad how AO is not up though for the session. It's actually near one of the highest fallers. I didn't see that coming. It's 1.5% away. That can reverse though, based off how the price action normally works. We'll check RMG. Nope, failing. To go negative on the day, it just needs really a penny based off the open. It is negative, yes, last close, but nothing too serious. Yeah, I would. That's a clear support. 313. Not worth it now. It's very hot after having a tea so early in the morning. See who's doing well. Metals for the day. Excuse me there. Sorry, time frame, typing wrong window. Ha! 60. Bless, man. Alright, 2:20 AM over here. I think I should get some sleep. Been great catching up. All the best for trading and stream. Cheers, my brother. If I don't catch you before I head off for the Christmas break, at some point afterwards, we should definitely hop on a stream together, man, or even off stream. It doesn't matter. Be nice to chat and share ideas, discussions, experiences, all the good stuff, my brother. It's been a pleasure as always. All the best, Andre. Yep. Interesting moves, eh? Test. One's page. Wish I could play some music. Probably get them on my headphones. Keep myself doing something. When the spread plays up. I'm going to pull up Bloomberg because I feel like I've got the same news flow recently. I want to expand to something special, something different. I use Bloomberg way less than I should. Really just for longer term research. And checking up on what's going on for the day. Heartbreaking. Dude. Okay. The thing is with air, right, for anybody who's worried in a similar position, normally the price action is made up from a couple minutes of movement. So if you are down all of a sudden in the opening moments of market, whatever you do is up to you, but if you buy or sell based off a move, it generally won't be where the price closes, which normally with stocks you see a crash, consolidation to where they kind of open or whatever. With this, the meat of the mood rather is made up from some random variated moments throughout the day. So like now, for example, you'd think it's going lower, but the fact that it's holding is an important stat. And our basis for investment is based off wider term frames. Couple of hours on the candlesticks per candlestick, or a daily setup, which is still all maintained, and the fundamental situation, which is the main trigger for me buying into the shares or shorting the shares, is extremely strong versus valuation metrics that go for this share. You had valuations at 100 pence, 180 pence, all that, but I think it's fair to say 530. In terms of current market conditions, revenue growth, all that stuff. It's not a great investment for 5-10 years, but maybe over the next 6 months to a year, it might have a huge spike kind of thing. Okado-esque, if anything. I'm going to pull up Bloomberg, so I might be popping between screens. What I wanted to look at just before that, I actually wanted to see, have any other analysts picked up on my thoughts? Because I've realized on Bloomberg you can also check analyst forecasts, and it's normally nice to see people thinking differently to you, but if there are maybe a few odd ones out, it's nice to always see some form of confirmation. Someone going against the herd, having a kind of target similar. Let's see. Most recent ones. I'm pretty sure there should be one higher than this, but 450 Peel Hunt, the 9th of December. That was 2 weeks ago. And if I can look at how it was before, they were 275 on... I don't get it. They had a target 2 days before at 450, then 475, then 250. That's probably a mistake. You can't just change your estimate 2 days later. 24th to 25th. I'll double check if there was any action 24th to 25th. Oh no. Was that earnings? Okay, so after earnings, after a drop in earnings, they reduced it. But now all of a sudden, there was a trading statement. Oh yeah, the earnings were a loss. That makes sense, I think. I'm going to double check this actually. If I can see the company filings on Bloomberg. Saves me looking at the website. Company filings. There you go. So they had earnings 24th as the most recent one. No, that must be a problem on Bloomberg's end. So 450 on their forecast. Nice. In terms of a transformation of earnings, if we look at 4 or 5 years worth of data, AO World has had a transformational year. So to be worth 5 times pre or 4 times pre COVID is fair, considering they were worth that much already with no earnings. Can't be a hater yet. I was before, but I'm not a hater. Around the block, what's going on? PSON, RMG, Baba, letdown. Alright. Yeah, so analyst coverage. Oh, and if you do a discounted cash flow model on AO World, the whole scene's changed. So any previous research has to drastically switch up everything. You see what the last one I can get access of is JPM. What is this? 24th of November, after that earnings. Does it show their profitability? Half one. It's currently growth. Makes sense. Their models actually come with serious similarities to mine. I wonder why the valuation is so different. Why do they see 220 pence? Which is half kind of where it is now. And have a look at their research whilst I'm here. Let's see. Main move, idiosyncratic. That's the similarity to my anti-beta status. I wish I knew how these guys made their models for their analyst forecast. Because I use completely different systems. Yet there's a rough trend that's similar, which I'd like to kind of see. This is that thing. Retest and go, firm and proper. And then you dump towards lows. Would be worth trying it with these guys. But I don't like the float situation. Metro back up a little bit. NEX is another one. Wider. That's some ugly action. Another hourly candle like that, and it's right to 203. Kind of where it opened. Lows at. Look at these guys' research. Revenue estimations for 2021. 1,500 million, so 1.5 billion. Yep, it's going to be above. Adjusted net income, 34 million. Yeah. Could be that. EPS. Yeah. Wait, so they valued this at 10% lower on negative earnings. What? Some analyst valuations are so by the textbook that they just don't make sense. And I can't agree. I'm long CRM for the gap fills as ever good. CRM. Let's have a look at what CRM is. Salesforce. Ooh, didn't they take over Slack recently? Oh, so you're talking intraday. Oh no, daily, sorry, not intraday. Your gap fill, lows of the gap, or beginning low of the gap. 238.7. But the important one to do is the closing area of the price, 241. So 3 points different there, 241. 227. I mean, for clarity, I'd want to break over these prior recent highs. Oh, daily looks primed actually. Yeah, if anything, I would target around 237. Easy $10. And your risk is probably below last session's low. Say 222. Risk $5 to make $10. I think CRM is a nice position. A lot of times people get caught up on these ones though. Price action, volume action, everything's confirming a lower move further. I don't know, this, if I drew a simple trend line. Ba-da-bum-bum-bum. Let's connect these up. Nothing too, that's not clear, but you know, roughly, yeah, a great risk reward setup kind of thing. Risk $5 for 10, and yeah, if you think it's going higher, then you got decent upside too. Yeah, whilst the fundamental situation doesn't meet my criterion, it's a nice trade. Spread must be tight for their market cap as well. What are you talking? 208 billion. Whoosh. That's large cap indeed. I'm just looking at some macro research for the company we're long, AO World. Just trying to see why these guys disagree with me so much. Market. It's unrelated to the market. Well, today proves that wrong, but it's only one sample. So, I agree with you folks. And my sample agrees too. Style factors. Yeah. Let's see. Online. Germany revenue up 41%. Yeah. Full integration of their mobile stuff. 2021 delay. Not great. Yes, I know. Store sales remain weak. Not a big deal with this business model. Revenue. Yeah. Why is the revenue forecast so low for the year after 2021? They only expect a 100 million increase in revenue from 2021. 2022's they expect 1.62 billion versus 1.5 billion on the dot. So 120 million more in revenue for these guys. That's a worry. 120 million in revenue more versus 500 more this year. And this year it's not just COVID, it's the business model showing proof of concept. And they're expecting an increase in margin of only 10 million additional, 11 million additional net income. That's ridiculous. I think it's very conservative. Yeah. 10 million additional. That is nothing too special. When I dive deeper into the fundamentals of AO World, I realized they were trying to bump up sales as much as possible, whilst probably even losing money in their German business. But as they develop in that market, they maintain themselves, then they're able to improve their margins on an existing sales base of customers and stuff. So in the UK, they were making money. So as that UK revenue grows, they make money on that kind of thing. I want to put up the exact stats from my calculations for exactly how much money they make from the UK versus their other markets. Let me find that out, because that's quite important. That's what these analysts normally wouldn't put on their research, because it takes far too much time. You can't really do that for every company. But if you do, it shows the real picture. You divide by region. So let's say, okay, for the last year, UK revenue was 901 million, roughly 86% of their sales. And that was up from 750 million the year before. German revenue plus the rest of Europe was 140 million. I think it was very low the year before. I don't seem to have the exact stat, not sure why. But I believe it's up about 50% from the year before. Germany itself is even more than that. But Europe as a whole is a big winner for AO World. So let me find their net income for each territory. Well, rather than net income, let me adjust for some things. Then I can get net income. Okay. Net income for the UK was 26.5 million on 901 million of revenue. Year before, net income was 15.5 million. So 150 more revenue and 10 million more net income. But as the revenue increases in an established market like the UK, the margins can improve, especially given the current situation too. So I would expect there to be a couple times over in that profitability. And Europe, they've been losing money consistently, but because they've been growing their revenue, maintaining a stable base, they can reduce the losses in Europe whilst at the same time increasing profits in the UK. And that adds towards overall profitability. So that's why they made only 1 million or something for the year before. But now for the first half they've made 18 million. So I assume UK profitability has increased, say, by 50%, so 39 million. Germany could be losing the same amount, and that could be different. All revenues are much higher and profitability is much higher. In all honesty, if I compute it in my head, then I can't really see many situations that are negative. Improve UK margin largely, or keep the UK margin, improve revenue largely. Europe stays fairly constant. You can't have both going down because profitability was 1.5 million for a year on the last measurement. For a whole year now, if you extrapolate 6 months, you get 36 million profitability, which can't be made up by the previous UK net income figure for AO World, and the loss of Europe as well wouldn't work. And if it's the same as before, maybe you have a stable net loss in Germany, but Europe has all of a sudden gone out of control. You went from £26.5 million to potentially 60 million, which no analyst forecasts bring in. And that doubles the evaluation on an earnings basis. And for growth stocks, normally they should have super high Ps, 50 to 100 kind of thing. This is about 50 based off extrapolation. So it's not that expensive in valuation, but no, on a relative perspective, it's not that expensive. But on a real kind of looking at this company, why is it worth 1.8 billion? Yeah, it could be class expensive. All right, Jimmy Sumter messages in the YouTube chat. Morning, Ryan. Thanks for the recent video uploads. I'm working through the TA series and finding it very interesting. Thank you. We spent a lot of time and we hope that they will be valuable to our community. I think it's important to put out content that really puts trading concepts, whether technical or fundamental, into perspective. So we include examples. And I've been trading for now 7.5 years almost. And it's nice to be able to just go back, include examples, work with a team, and produce a nice set of videos. Quality, long, in-depth, detailed videos. Do you by any chance have any TV videos showing how the various tools work for illustrating a chart? Let me have a look actually, because we might have some videos that for illustrating the chart, drawing them in particular. I think that's a great idea actually, and we have it on our ideas list, but we're working through some of the priorities. But on the series, there can be some that show the illustrations in action, and it wouldn't be too hard to decompose how we do them. So how we put trend lines, for example. Let me pull up that video, trend lines and channels. That probably best answers your question for what we have so far. Let's pull up. So how we draw them, they're drawn by connecting at least 2 points. They project levels of support, which are the higher levels where you'd expect the price to, support, which are the lower levels. If the price breaks below, you'd expect it to bounce on that point kind of thing. So this area is a point of support, this area is a point of support where the price bounced. Resistance is where if the price breaks above, you'd expect a breakout, positive for the shares or the asset in particular that you're trading. And if it fails to break above resistance, then you'd expect it to go and test support or float around, whatever. That's the kind of thing. What else? So how we construct them. Yeah, I would look at this video. If you want to look at illustrating a chart, generally trend channel lines are quite important so you can figure out what's going on. I walk through every single example. I pre-write a script before so that I can annotate whilst I'm going along as well. Different assets like Apple, you can see by drawing parallel trend lines. In this case, how you could see, okay, this is a point of resistance whilst using trend lines in action. Price falls, okay, point of support. Do we buy? Well, if your whole perspective of the stock is positive, then yes. or in this case tries, bounce, reverses, fails. And look, just because a price breaks below a level of support or breaks above doesn't mean it's going to continue going in that direction. It could just break below, break out, break up, be choppy and all that. Generally, that's what happens. So you have to bring the whole amount of context into account. Fundamental momentum, which is shown through technical pricing, all that stuff. Quantitative as well. Whilst I can't go into those details in my system, I can hopefully make some videos in the future to help regarding that. We're in the process of developing more content as we go along. But we've just released 29 videos, so I think that's probably enough for the meantime for folks to use. I'd say that trend lines and channels video is going to be quite useful. If I look through off the back of my head now, I'm going to forget the fundamental stuff and the trading in action series. Drawing stuff. Trend lines and channels is a good one. Support and resistance is obviously a nice one. Very different to what you normally get out there. With support and resistance, what most people think is, okay, price breaks above resistance, go long. Price breaks below support, either, well, above resistance if you're bullish, go long, or short at that point if you're bearish, and vice versa when it comes to support. Now, with price barriers of support and resistance, we looked at some complicated stuff. Polarity flips, static price barriers, dynamic price barriers, real examples as well. Imagine we developed all these examples plus the explanation. This isn't a simple video of us just throwing words at you. And the same with the fundamental analysis series. Whilst it's difficult to pull up a chart because it's not TA, I've tried my best to actually walk through basic things, real life examples. Okay, this is a bit wordy, but then hey, let's look at a real life balance sheet. I'll give you a couple of hours, walk you through what my thoughts are of this simple balance sheet. And then limitations of the balance sheet, so you can't use these things as gold. What do all these bits mean? Problems like delays in reporting. A business can report an inflow of cash later if it's obviously within the IFRS in the UK, for example, or the US General Accounting Principles, the GAAP. If you've ever heard of that before, that's what it means. Framework. And how do you value an asset that you've just bought? Sometimes in the UK you can revalue. In the US you have to judge it at your purchase cost. So if you buy an asset at 100 million 2 years ago, in terms of your account statement it shows that, but you can assign a point of depreciation. What if that price goes up? Well, you only make a profit on selling it. So with Metro, for example, recently they acquired their mortgage book. Well, they sold their mortgage book actually. 3 billion worth of loans they sold to NatWest. And on that sale versus when they put it on their accounts, when they bought it, they netted about 87 million pounds. Of all that, 87 million was profit on that sale. So for their market cap, they should include that on, not market cap, for their accounting, they should include that 87 million profit in their financials. So they'll probably lose less for the year, and you'd think, wow, that's an improvement. But in reality, they may have lost more money, but made money from that respect. So they maybe lose the same as last year, kind of thing. You have to look at all of these things in context. But the fact that they made money, with the way accounting works, is it will show as profit. When an acquisition is normally showing depreciation as expenses on an income statement. So you depreciate the stock, the balance sheet would be reduced, but in the same time, say if you depreciate a balance by say 10k a year on a 100k asset, that 10k, obviously at the end of the year, it's now worth, the 100k acquisition is worth 90k, but obviously it's been used to make money. So that 10k depreciation is taken off the income statement as a cost of sales and expense, because you're using that asset to make money, right? And also that asset can make money for you in terms of revenue that then comes down to a net profit margin. That can be great, build the business as present, whatever, intangibles, all that. But generally with accounting, you can't rely on those figures as something set in stone. Hence why I would look more at the overall context than just one balance sheet. Look at these guys. I think they were British American Tobacco. Their recent half-year report, or when we were looking at these guys, was the 6th month, so June 30th, 2019. versus the previous half year, their total assets were up 2 billion or so, I believe. Half year in the last year, the same period in the last year, they're up about 6 billion. So there's growth, see, from here to here to here, which is nice. But what about their liabilities? If we look at total non-current, which is generally the long-term ones, the debt that means the most, but you don't need to worry in the near term about paying off. Let's look from here. 63.8 billion to 64.3 billion to 62. Liabilities are down. Company's profitability is up, I assume, just from that initial assumption. Assets are up period on period on period. Here, debt's up that period versus the last one. But then if we go to the most recent, they're down. What about the current ones? Current debt, basically debt that you have to pay within a year, is up a little bit and then up a lot more. That's up roughly 3.7 billion versus the earliest period we have on this balance sheet. That's down about 1 billion. So they're not actually doing much better in terms of debt. Assets up about 6 billion. So assets up 6 billion. Then we'll take off here, say 1 billion, let's say, less debt. So 7 billion positive impact. And 3.7 billion, let's say 4 billion. We take that 4 billion off. 3 billion positive impact. So yeah, the company must be making money. They're increasing their asset position, all that stuff. Just from a simple look at the balance sheet. We're not going too deep, but then we'd probably look at the income statement and try and develop a thesis therein. But we could say that say the company took, 5 billion in debt, and it's reasonable to add it in the next period. Say it was a day before this stuff was filed. You won't see that. So you'd think this company has great liquidity and it's growing. But what if, I don't know, they borrow 100 billion for an acquisition or whatever? That isn't that great. Like, what's their name did a while back? A big Cas Minerals, that's it. Big mining company. They borrowed a lot. That did show on their balance sheet and all that, but they borrowed a lot for an acquisition that most people didn't really think was a great idea. Their shares didn't do so well following that period. But on a balance sheet, if the timing was off, you wouldn't have seen that. You would have timed it correctly, likely. Whoa, what's going on with the FTSE? It's dumping. GKP, that one hurts my heart. Well, not really. But I'm wanting it higher for the sake of most of our community is quite bullish. Rolls-Royce beginning to fail. I'd be closely considering a short on Cineworld here. But that liquidity issue. Something about them. Okay, I'm going to check the YouTube chat real quick. I hope I answered some of your questions, Jimmy. I'd say trend lines and channels is the best one you can look at for context of charts. But we will be working on more content. We currently are working on a lot more content. A lot more free content. And also a report. We're working on a weekly report across different asset classes. That will be part of our paid package, but the videos will be free nonetheless, and all the content is valuable. For people who don't want to spend money but still want to learn something, that's a great idea to look at the videos. But for those who are traders, actively want some research, up to date, the time we spend making it, we'll be charging like, I think, £10 a month for each report, or 35 for the whole package, plus a monthly conference kind of thing. So that's quite nice. Not a huge cost, but it compensates the time we put. But the videos, we're going to consistently make a lot of free ones. Articles, podcasts are always out there. I'm thinking of doing one over the next week or so, as soon as I can get some time. I think what I might do, though, I probably won't get time before I head back to see the family for Christmas. And we're going to take a 2-week break from streams and stuff. So what I'll do is I will probably work on preliminary ideas, write up stuff, and then record a couple when I'm back and put them out. That's a dump. That's the index dump we assumed of the worst case scenario for the day. So we're probably breaking below lows, if that's the case. Where's the 4 hourly that I wanted to find? $53 and below. 2K exposure. The problem is they're so volatile. I want to see if I can borrow these guys though. Wow, you can still borrow them. Margin 35%. Minimum gap. Okay. Stop distance 4. That's fine. I kind of don't want to trade them, but we'll reevaluate. RMG should be lower too. 316. Yep. We really missed that one at 330. But we're not going to trade for the sake of it. Thank you to Evergood for the follow as well. I shouldn't be opening a private message, so I will cancel that real quick. I think it was a private message. I'm so glad that people are liking the new series, the trading videos where we look at literally everything you need to know so far. TA, FA, we're building on those as well. I had an archive of a lot of these, all recorded by myself and developed by myself and the team at Quantium Research. Shout out to the guys. And we're looking forward to building a lot more articles as well. A couple of interesting collaborations coming soon too. Oil is not doing well, sub 50. I don't think that makes too much of a difference to GKP, but it's funny, just because oil is below or above 50, you see a huge move on mid-cap UK oilers. The financial situation for the past half year wasn't that great. This is what I want to see, man. AO holding up and the index diving. That's what I want to see. I had such a good night's sleep last night. It's crazy. TradingView chat. How do you look at fundamentals? How do you analyze? Well, I would look at some of the videos on the Quantium Research YouTube channel. I'll show you a link. And if you can, we'd appreciate the subscribe, the shares, the likes, the comments, all of that stuff, all the juicy stuff. And we put out some videos of ways to analyze fundamentals. There's a lot more stuff I can talk about, but these are the basics where I'll dive into, say, a balance sheet and exactly what the components are and what works in what way. So things like I said, historic cost accounting versus revaluing, and how do you revalue fairly? How can you audit a fair revaluation kind of thing? Management, what does management do that develops strong investor confidence kind of thing? What are consumer and investor trends, say macroeconomic trends, momentum-based kind of trends, dive into them. Consumer trends are just buying certain items for a short period of time. Say, when Nintendo released Pokemon Go, huge revenue boost, but then what about that afterwards? Really no one plays it. Same with Apex Legends for EA. It could have been the size of Fortnite. It didn't maintain as much. Fortnite for Tencent. Those kind of things. And what exactly is the appropriate way for us to react as traders or investors, depending on what your thesis is. They sometimes differ. But also TA, if you like that. Look at all these beautiful, beautiful thumbnails. Straight out of the video. Nothing misleading, none of that stuff. And also the trading videos, if I go to the playlist, you can watch me trade. These are highlights of a couple of days sessions or a whole day sessions or a couple of hours in just literally 5 minutes. The longest was like 9 minutes. These are quite popular, surprisingly. Oh, nice to look back at them sometime. But I don't really like looking back at my PL, but I know it's very entertaining for most, so I upload them, quickly put them out. Don't really spend too much time on them myself. I like the streams more for the psychology element. Gonna pour some water. Actually, I might pour some juice. I'll look at the YouTube chat real quick. Okay. So, yep. I guess for a couple of streams I was talking about all this content we were going to put out. Well, if you guys want to see that, not only do you have the trade recap videos, where's the worst loss so far in the stream series, losing £45.95 on AO World, and the best gain so far, Jumia shares. Yeah. Does that? Oh, this wasn't in the series, the Cineworld trade. Yeah, I just was waiting to fix up the series stream stuffs. That's why my P&L looks way higher than it is right now. That was on my personal account, but I wanted to do it in the context of the 10kpf. And it was a tester video to see if you guys like the new format, which thankfully you did. So we've got these trading videos, we've got educational videos, all free. Let's look at the technical analysis ones. 20 videos out here, ascending and descending triangles, all the way to formations, the ancient Japanese trading strategy, trading methodology, which is called candlestick analysis. This one's beautiful because I dive into every single candlestick you can imagine. Look at that. Boom. Bullish Mariposa. Huge up day is the way to think of it, where you close right at the highs. A doji, exactly what it is, how the formation works. There's so many different things. Hanging man. I'll walk you through it with an example for each, straight out of the real world. This is my favorite video in terms of value, because you could read a whole book or you could watch this 32-minute video, and this will give you a lot more value, spends less time, and excites you a bit. Obviously, you shouldn't trade directly off one certain candlestick or whatever, but generally understanding momentum is very important. Bullish haramis. Ever heard people talk about 3 white soldiers, 3 black crows on the other hand? I think is the opposite one, 3 black crows. We saw this on oil in 2016, and this was kind of where we had a huge failure. That's the Nifty 50, that's India's main index. 3 black crows followed by Laura's downwards move. Shooting star. I won't show you all the examples, but if you want to have a look at that, that's on our YouTube channel, Quantium Research. If you haven't already subscribed, we would appreciate as much support as we could get. It's obviously clear that from putting these videos out, we don't get any money for it, but it is our way to release quality content. Oh, thank you. Quality content for the trading community from actual traders, not people who don't put real money up. I'm gonna have to cancel that. That was when the microphone wasn't working. Yeah, RMG hurts my heart. Hurts my heart. I think I might cook something up later. Maybe order food. I've ordered food too much recently. That's a bad idea. Yeah, so we've got a lot of videos. 29 of this type. TA 20 alone. 7 interesting ones on FA, I believe. 1, 2, 3, 4, 5, 6, 7. Yep. Cash flow statements. The main 3 areas of accounting you should understand. Well, not of accounting, but of statements that a company releases. The financial statements. You've got cash flow statements. You've got balance sheets. And the other one is income statements, which doesn't seem to be here. I may have actually not recorded that video yet. That's going to be out soon. I've produced all the stuff I need for that. I just need to record it. That's going to be out soon. And we'll have a separate mini-series on each one where we dive deeper into certain elements. I think it'll be real fun to look into how these work, so that if you see a company release financials, you don't exactly believe everything they're saying. If I go back to Bloomberg, speaking of believe what they're saying, we'll look at AO World's report from a major investment bank and why I disagree with them. Let's see. They expect cash to be much higher for some guys. Let's see. Payables higher. That's alright. I can't show this stuff on screen because it's straight from a Bloomberg terminal, which could get me banned from Bloomberg. So I checked up that the only way I can use it is on my other monitor. And not mention explicit details beyond some numbers out of context. But oh, JPM is corporate broker for AO World. They may hold positions. That's so weird for them to put a 50% discount if they hold shares in these guys. FTSE's diving again. Sinner trying to fail. I could get a nice day trade in here, really, if I wanted to. Set a couple. Yeah, test the 15 man. Fail. Casual strut. Really though, there's not too much in it. GKP 105. Ooh. It's trying it for me. Oh, got some messages in chat. VIX up 17%. Wow. Is that the UK influencing the US for a change? Wowza. Below 53.37, it's clear that this is going to fail on a daily basis. But on the intraday, it's already been battered a lot more than you'd expect it to do so. And you could expect an attempt here and fail. If I'm doing anything, I'm shorting sub 53. But there's not a huge move in there. Index probably sell off heavily towards close. This has already done the meat of a move for an intraday trade. We want AO World to recover and then the inverse kind of thing. That's what my thesis for this trade was. It hasn't actually played out yet. $63.90 though. Why am I looking at live prices through anywhere other than Bloomberg? That's what I gotta ask myself. I'll pull up the MCX real quick. FTSE 250. Okay. Where is AO on the list of the FTSE 250? The 52nd largest loser. That's at 398.5. Yeah. That's not too bad. Who are the winners? Yeah, mostly mining related. Smooth. FXPO, iron ore prices holds them up. The brokers, yeah, Avon Rubber, only because of the broken correlation, they probably need to fix it for a way. But that's why they're not up huge, because of their problems right now. Gambling companies. Money Supermarket. Let's see what's below these guys. Oh, of the FTSE 250, 154 companies are down today. No, not that. What am I talking about? Actually, 204 companies of the 200 are down. Yeah. And 205 now, sorry. 35 companies are up and 10 are unchanged. So the whole board's taken a battering. To be the 52nd largest loser isn't positive that much. But AO World tends to rise towards end of day. And if there's a continued battering, that would be nice. This setup says that. I like how I'm analysing these guys, but I don't intend to get out today based off this stuff too. But I like to protect my gains. Sinner World should be dumping. It's just nice monitoring. I spend a lot of days monitoring just to take the action on a few. But it's great when you have that trade, you can take the rest of the day off, relax a little bit, look at new ideas, and develop. You don't have to be in the market every single day. That's the long and short of it. A lot of people think you've got to be trading every single minute. don't. You're going to drive yourself insane. Analyzing them already drives you insane. But if you love it, you'll be excited to wake up in the morning and trade. Well, research for a trade, not trade. Let's see. Dow futures 500 points below the high of the session. Says Ronnie Chopra 1. We follow him on Twitter. He is chill. Always putting out some nice commentary of the markets. Oil's down 5%. That explains why GKP is getting battered. Oof. Full bid as well. Nope. Yeah. Enquest 10% down. Oil 5.3. That actually, oil could be down 7% at the rate today that things are going. Index not looking pretty, but still buyers. Okay. Let's have a look. Bloomberg's actually so much easier to annotate exactly what's going on. 204 companies down on the FTSE 250, 35 up and 11 unchanged. Highest riser, mining, Seihan. Highest faller, PFC, Petrofac to 136. They're in the oil services industry. Followed by Cineworld at 10%. We like Cineworld being in that kind of territory because it is either make or break, which if it breaks, you can easily get a nice chunk of that move towards day lows, get yourself free. 7-8% trade. No big harm, but an easy faker too, either way. One must be entirely careful. I want to look and see what this AO World thought is. October 2020. Who put a prediction of 3? No, it went from 120 in July 2020 to 190 in October 2020 to 225 now. Well, they were very offside, I guess. If the price rises, they increase it. That's how analyst forecasts work these days. Just adjust it to where it is now. A little bit in the way where you think it's going. I think a lot of people are afraid to put out a forecast that's outlandish for a company. Because if they're wrong, which they will be most of the time, they'll lose a lot of money. If they're right most of the time, they'll have their job. And I guess that keeps them progressing. But you need to take a risk sometime. AO World, though, is not a worldie. Intraday 393 should hold. I'd be upset if it doesn't. But I'm gonna stick my stop to the 370 point, yeah. Would be upsetting. But the index is dictating what happens, I guess. We'd have expected to have a mega day today, but we didn't. So I'm going to evaluate some things on my other screen. Yeah. Generally choppy. The fact that it was getting bought up hardcore. Still got more bid action. And the thing is, when you're wrong, yeah, you got to accept you're wrong. So I could be wrong. Depends how most of this action plays out today. And I could end up accepting I'm wrong. Which is fine. But just not what I would have hoped for. Index is getting mattered. I'm going to look at the FTSE 100 as well, because these are our main markets of interest. 350 isn't too much of interest for liquidity requirements, especially on the stream. We don't want to trade anything live that could potentially be influenced by a large audience watching, because that is completely wrong, and it's not skill, it is manipulation. So, for example, AOL, 1.8 billion or so market cap, volatility is much higher than anything that, you know, me buying makes a difference. No, it doesn't. So, that's why we trade these ones live. It's not right to do anything else in another way. That would be funny. 3 to 5. We're probably going to give up all our gains trying to chase this one. My system's my system, but in this case, my system is wrong sometimes. It is what it is. Fundamentally though, I like the situation of the company. I just don't like it all of a sudden being different to a respective index. I'd like a console as low as 392, yeah. Console higher than 385 and we're still on play. Just means we're gonna have to hold them longer. No biggie. It's an investment. We're down about 180 versus yesterday's, well, last trading session's situation. Fine though. Should have brought some snacks. Perfect. Pringles. The healthiest snack one can ever have. Might make a fair bit of noise. Try and eat from a distance. Barbecue. Very nice. Far too early for lunch. Very nice. I've got a quick question for those who trade regularly themselves. What's your go-to snack? Because for me, normally it's things that don't crunch. Affects your focus too much. But I had Pringles. I like, I don't know, pasta or something. Generally, something munch. Dijon mustard. I don't have that as my snack, but Dijon mustard followed us on TradingView. Thank you so much. We appreciate the support. What we don't appreciate is the way AO World shares are moving right now. That's messy. Such a healthy downtrend, eh? On a tighter time frame. $392 is an important point. We might reconsider things depending on where we see that. Can it hold? Can it not? We'll see. These are so nice though. I'm looking at myself. Looking at myself. To reload. Oh my, that's not pretty. us being wrong though is going to cost us a lot, because if this is somewhat of a beta, that one's going to hurt. Stock in an uptrend can fall. That's a hard fall, man. Little 10% from there, 380s, maybe lower. But damn, considering the fact that I'm losing money, I feel real good because these Pringles are nice. P&L means nothing, brother. It is Bloody Monday. Do we have a similar dump there? Pretty sure. No. Cool down, dripped under. Where we're in now. Taking a battering. All it takes is one session, but even if the session's negative, it just recovers the next day kind of thing. Don't like it though that it's linked to the index all of a sudden. So nice though, barbecue Pringles, real nice. Oh, we got a comment. What's going on? New subscriber, Ashok Rao Potter. Appreciate you, fam. Oh, 212 on the FTSE 250 are down. 8 are up. No, 8 are unchanged. 30 are up. Imagine if we retest the level I open. This is where we should have hoped. Oh. Not great. I wouldn't have wanted to sit at the screen watching this, but looks like we shall have to. Oops. First group's getting battered. ENIAC should be 220, not too bad. Wow. I could actually be losing money by the end of this session. Very mad. Wow. Not a great turnout. Yeah, that level. 380 must hold. That's fine. 360s, that stuff if seen. I'm gonna have to call it quits, but we're good. We were prepared to lose either way. If we had a pop, we would have moved it higher, but didn't work out that way. Almost 300 down for the day. Woozer. Could be a £600 day. 216 stocks on the FTSE 250 down for the day. These guys down 6.5. That puts them in the top 20, I believe. Oof. If I was intraday trading, I'd have closed, like if I had it, I'd have closed 399, 4-dash. Maybe even 393. Because I've got a little bit of a higher target, I can risk to 360 or so. But it just means I'm risking my entire profit plus potentially making a loss. But that's fine. It's just interesting to watch it on a day where I expect it to do the complete opposite of what it actually does. Plays with your emotions a little bit, but you shouldn't care that much. Emotions are meaningless in this game. I think I might head off to the bathroom for a minute. Take a quick bathroom break. So I'll turn my camera off, mute my microphone. Well, I'll mute it after I've finished. But I'll go to the bathroom real quick. Yes, this is my P&L. And yes, it's not looking too pretty. Well, it still shows them up, but in reality, these were 415 session before, 6.6% lower. I was very wrong so far. But this is the expected volatility. For these to cool off, you need guts of steel. It would be safe to say, yeah, 365 or so. If I calculate, what was our initial position? It's supposed to be an investment, eh? Oh, I got an alert. I owe less than 390. Thank you, that came through at the right time. Saved me from nothing. 386, I thought it was 383 now. Oof. like that makes a difference. 386.5 times, no, 383.5 times, where do we open? At 914 divided by 100. £3,505 minus 914 times 360. 63, let's say. 2.63. £187 plus £20 in fees and probably a couple of pounds for the carry. Okay, so 363 we lose 200 and wait, I've done that wrong. 3505 minus 914 times 3.63 plus 20. Yeah, we lose about £210 at 363. If that were to happen, not seeing it that likely, but if it does, 363 would be unfortunate. It's definitely expensive, but it's still cheap. Hence why we are still long. You can always get a flash way below and a recovery stream. Imagine how horrible that would be. How's a daily looking? Ooh, on the edge, tinkering a little bit. We've seen just below. Bid ask went 364 or something, but it hasn't been paid. Twitter notification. Yeah. I think the index is going to get battered, but by my thesis, there is a potential issue. So we have to be prepared for the worst case scenario today, unfortunately, but I don't think it's likely, but it could be possible. Yeah. There's some closeness here. If it's going there, though, I don't think it's bouncing back, that's for sure. Worst case is 363, so times the spread. What's the spread now? 2 pennies. I would do 360. Yeah. Is that safe? Possible? Limited, able. 360. I don't know why it's not putting in. Let me refresh real quick. And then I'll go for a bathroom break. Let's see. 216 down. First group, EasyJet, Carnival, CPI's Capita. Capita's at 35 pence. Oof. I don't know why my stop's not getting put in. Oh, it is now. Let's check the specs. Minimum stop distance, 1 penny. You mad? No way this is that liquid. Okay. This does set us up for potentially getting stopped out. But in terms of daily risk, yeah. It's below my normal kind of intended daily risk. Because we were up a little bit, it works. No intention to add or reduce. I could have reduced before, but in terms of allocation risk, I'm comfortable with how much risk I took initially. Cineworld could be a short, but I want to keep myself from over trading potentially today. No trades, I think, coming up. 575. Yep. If I put my stop in at 360, it has to be really, really bad for me to get stopped out. Oof. What's happening here? We are dumping. Can't have a daily close below here. What's the index saying? First time we've been down in a very long time. Whoa! FTSE down 63.31. That is a bloody day for the markets. And that does change trend for a lot of major stocks. But this one shouldn't be one of them. GKP 102.5. Rolls Royce as well, parity 102. Cineworld didn't get affected. NEX 219 not affected as well. Oof. AO World is getting dumped. I'd have to go a little bit above or a little bit below. I could change that to 250 or so. $3.75. Yeah, I'm gonna adjust my stop. 357. That's about £260 lost. 5 is 257, 260. Yeah, we'll take that. 357.5. That means if the trend's actually breaking down, then we are out of AO shares. It's trying to hold. That is some hold. It's never great adjusting, but you have to follow your rules, and that was in my rules. Something aggressive though. 392 to buy. What's the index saying there? Well, that's good. We lost a lot of money for the day. Now we got an alert above 390. Index is still getting battered. AO World hit support, reversed intraday. What are we down for the day? In terms of percentage action, 5.4%. Let's look across the leaderboards. They were 55th, so a relative recovery. Need to hold above 394 though for that to maintain. This is what this stock is about. It can shock you and still manage to end up somewhat positive on a brutal day across most factors, which is cool, real cool. Well, I'm gonna go to the bathroom and I'll be back shortly. I'll just check on chat in case I haven't attended to anyone's messages. Yeah, no, we're good. I'll be back shortly. Highest faller in the 250 is HMSO, highest riser, Seihan, only 3% as well. So basically, in my books, everything's down today. That's the best way to look at it. And yes, we could have traded RMG. Yup. Very unfortunate. That frustrates me more than anything. Cineworld. Nope. Don't want it. GKP though, 102. Not that nice. It's so fancy how even if AOL's in an uptrend, it moves up and down like crazy and still maintains that uptrend. That's the same move we had here. Break the trend, maintain the trend. Let's see if that holds. Well, I'm going to go for a quick bathroom break and I will be back. Let me just get the audio. We're back. Just as I come back, the shares dump more. What is going on with these guys? I was excited for a second. I saw a 2-penny drop. Whoosh. Oh well. Oh well indeed. I could try be smart with this and play the whole worst case scenario, but it's already the risk of me being wrong already on top of being wrong, just for the sake of 260 when it could be missing out on the large move. Doesn't really make sense with the spread as well. It just means I'd be saying I told you so when it drops a little bit. That's fine. I don't bother. I don't take it seriously. I don't take it that deep. Thinking of getting, tier 3 and for tier 4. I was going to say thinking of getting a haircut. That's not going to happen. Whoa, exactly what we thought. G7 as well. Okay, where is AO now on the list? 25th highest faller in their own index. That is so the opposite of everything I looked at. I was so surprised. I'm going to put up a separate tab and try and understand where I was wrong, unless there's a Brexit link. I can't really think. Okay, let's do a 4-hourly scale. Where is that scale? Okay. Index up, these guys down, big sample. Index up, these guys down. Yeah. Index down, these guys up, breakout. Index down, these guys up. I can't find any of these major moves that meet my criterion. Adjusted as well, that suggest I could be wrong on this. Flat up. Okay, major up there on the index. 4% rise. These guys 11.5% down. That is very, very weird. The first time in how many sessions? In 63 sessions where the correlation has lacked. Let me go back to risk event though. That might be easier. Okay, risk, mid-risk period, August index up a little, these guys up larger, index down a little, these guys down more, index down a little, these guys down more, index down a little, these guys down more, but the major Major mutual amount. Yeah. So a stable market is what would likely push that breakout from what I was looking at. Yet a down market, a casual down day switches to these guys, but a big down day. Let's see, small down day. Small flat down day. This, though, when I looked in terms of factors, the majority of its moves are irrespective of the macro scene of what's going on. So I guess this move was simply respective of the wider market. Okay. Well, not. It was respective of anything other than the wider market, is what I'm trying to say. So if it's breaking out, it is going to. I thought I dropped something. It is going to test supports on the way up, so that makes sense. Okay, we're good. Still good. I assume it's trying to get a couple people's stops played. For a second, I always like to question myself of what exactly could have gone wrong. But for now, the thesis still seems quite clean. And I can lose money, but at least I can lose money with my head up high. Yep. I think what we will do is probably stop the stream. I think what I'll do is I'll make a little video. Yeah, I'll make a little video. Okay, so we're giving a little update. We expected a breakout today when the index was doing very poorly. We expected AO to start breaking higher than it was 4:15 on Friday when we closed last week. And we expected it to test highs of 4:30 and beyond and just hold it maybe up our stop. Well, here's what actually happened. If we pull up the chart, we opened at around where we closed and boom, straight down to 384 now, I think the lows. And it's trying, every minute it tries, it seems to be getting battered lower. And whilst we're not exactly certain of whether the trend is intact in this respect, we like the financial side of things. I really disagree with most analyst forecasts out there. And even the ones increasing, I feel like they're not realistic enough because this is a fundamentally different company to what it was for the past 4-5 years or so. In the fact that they're actually making money, that's a really important thing to consider. But nonetheless, in terms of their share price action, I think it's fair to stick to our disciplines. Our stop when we opened was around 340, but now that we've had some room for a development in the price higher, we entered at 383.5, so we could still lose money, and we were making a decent amount, I think £270 at highs or something. But we're hoping to catch this bigger move. Now, it might take a lot more time than we thought, but it's fine. In terms of fundamentals, we can sleep on these guys. But here's the situation, right? If we are going to get cut out and the move breaks down, we've put our stop. You can see it's trying. They're trying to break below where we need it above for the end of the day. If it does break there, which it could do, if we're not really positive by the end of the day, that's probably what's next to these guys. If we do, say the index drags it down, which we thought there was no correlation, we still believe it's just an interim thing. It's just trying to retrace a little bit, maintain trend, and then go back up. We put our stop at 357.5, so that's relatively wide below the level where I think worst case scenario is about 364 or so. This kind of range. If they really want to get out people's stops, well, there's no they because this is an automated exchange, but if the stops are really going to get cut out in this case, then 364 to 370 for literally a minute could be hit and then reverse. So we don't want to get cut out on that kind of thing. So we put our stop to 357.5. And I think we're going to probably end the session. We're also live right now. We were looking at a couple of factors with respect to this trade or investment, depending on how things progress over the next couple of days. If we're still in, it might ideally be that. And of course, the market, there's been a huge bloodbath. This is when the UK has announced basically a third lockdown. Most major cities have had tier 4, which means you close down restaurants. They can only do delivery. Non-essential stores are closed, kind of thing. Cineworld, for example, has broken down from like a static point where it was trading at. Rolls-Royce, battered, tested an important point of support, held, but probably could try and break down again. We were trying to short Royal Mail on the last stream. We didn't get in eventually. It was 324. We thought, if we are getting back in, we'll try 330. That's not going to happen now. And we believe it's going straight to around 304, 307, and if not, really lower towards around 290s, maybe even high 280s kind of thing. But in the meantime, we hold AO, and if it goes higher, we're holding for the breakout of potentially new all-time highs, or maybe a test of previous all-time highs, which was only a little bit higher. Really, you need one big day kind of thing. But below 360, adjusted for spread 364, below that 357.5 will be out if that happens, and we'll lose probably about £270 or so. Let's hope that doesn't happen, because we were having such a nice week, but we shall see. I'll be back soon to update you, and this whole video will be one anyway, so it'll be filmed over maybe a couple of days, weeks, months. Let's see how this plays out. I'll catch you guys soon. Okay, all good, all juicy. That was a nice recap, and I'll edit that stuff when it comes to the end. Let me get rid of that. Okay. I haven't looked at chat for time, but I think it's because I popped out. Farhad Ahmed, have you changed your name? Or are you who I think you are? Because I recognize the name Farhad from your Twitter, I believe. Nice to see you again if you're our friend, and if not, welcome to the stream. Anyone who's in the stream is a friend, nonetheless. Yeah, so the markets are getting smashed today. I really expected AO to be up. I was really trying to call that. And now I went from a point where I thought there's no way I can lose money on this to actually how much money could I potentially lose if this isn't correct. So yeah, very unfortunate. No immediate term news flow coming for these guys, but everything is positive for them, so there really isn't anything that can push the shares to properly crash, except for algos, volume and all that stuff, which does surprisingly make an impact at times. Just for me, I'm comfortable. I'm still long. Shame we're £250 worth off today. I don't think I want to be trading today, in all honesty. I don't think there are clear-cut things. I don't want to make any rash decisions based off something that I didn't see coming. Didn't see a huge crash coming today because the past couple of lockdowns didn't really have too much of an impact. This changes up the scene for most stocks around here. Metro as well. 150 straight to 123. I mean, 80 million. What's the market cap? If they made 87 million on that sale, then versus where they were 10% lower, their market cap should be, let's say, 280 now, so 40% higher. Really, they should be higher than 153. The problem is, the company is very likely to lose money. And what happens is the fact that they're making a little bit of money all of a sudden on one disposal of an asset affects their long-term profitability, but it also means they're going to be losing money anyway. So they lose 200 million, make 80 million, you still lose 120 million for the year, let's say. And that 80 million that you've made isn't sustainable. So in the next year, it's just going to be a bigger loss if you can't improve your business model. So I can't really see anything super positive out of that. And we'll hold off. But the fact that that deal has happened, fundamentally there should be some form of appreciation. So I assume one expects it to be priced in, 20% premium, I don't really know. 7% in terms of the daily. I'm not sure. You would have probably expected that to happen, just not the profit on the disposal. GKP at 104, battered, absolutely battered. Trend hasn't changed entirely. Well, it has to the extent where it's not probably good. If it's going either way, it's going down in the near term, but in the long term, there's still hope. I worry about impairments on these guys. The impact on these guys, I'm not sure. Ooh, let's see. We recorded this video. Where is it? That should be it. Might be quite loud.
Okay, so we're giving a little update. We expected a breakout today when the index was doing
Cool,
back
clean.
up. Tested and
Actually, the hair's not too bad. Well, let's see. Where is the AO part 1? This is actually how I record my videos. I record in parts and then I edit all the parts together so that it smoothly kind of goes along. Because it's very difficult to get them all correct and timed well. So I just do bits, and if it's not appropriate, I just don't include it. What's going on? I don't understand where the first part was. Don't tell me I didn't save it. AO World December 16th open part 1. Yeah, that's it. There we go. Rename. Copy. Oh, Farhad, if you're still here, because I know you live in the city. Wait, I'm going to double check if you're the right Farhad. Don't know if you're still here, but nonetheless, I was going to say the views from Canary Wharf at night are beautiful. I wasn't actually there this time, but I was catching the DLR, which is the overground rail in London, and it was going from where I live in Central to East, which was, it's just amazing. If there's anywhere I'd live, if things work out the way I'd hope, then it would be Canary Wharf, looking right over the city bit. Maybe on a relatively lower floor where you can get a view of the buildings kind of coming together, the night, the bridges, the water. That would be amazing. Problem is, rent is so large in these places. So excessive. Very excessive. For East London as well. I know Canary Wharf is a unique place. Wow. I actually almost poured the water, but I caught it. Amazing. Are we going to see £62 on the FTSE 100 for the day? I'm not going to tweet about AO World at the moment, because on the way I'm used to this stock and how I've analysed it, how it is at the end of the day could be completely different. I could get stopped out, or I could be right back into positive territory. So there's no point saying, I was 100% wrong, because my view was for the whole day. But I think I will be wrong, and I think I'll still be in. But it just means I'll have to wait a little longer. Fine. I had a couple months vision on these guys. I just thought it would be earlier. But then again, it did 35% in a couple of sessions. And I really should have gone in at the lower point, because the fundamental news was way back here. I think I was just not updated with it. But I don't mind being 20% higher for something that I believe is going to go to all-time highs, which is 20% above now or so. But levels for valuation, easy 30-40% above here. Wouldn't even be stressful, especially when it breaks. Let me check the TradingView chat and the YT chat. Yep, I think what I'm going to do is call it a day for the streams, but I'll be looking around. Today I just think I need to spend some time preparing for my exams as well. because I'm heading off on the 23rd or 24th, a couple days, so I might as well prepare myself. Wonder where Tesla's pre-market is. Very weird that I'm thinking of them. 653. Whoever got those 695, I think they were just options expiring. Whoever was forced to buy must be kicking themselves that they didn't realize how options worked. Oh my. Feel bad. See where AO is. 35th largest faller. How is that so brutal? I didn't think it would be even near. I didn't think we'd be down today. But it is what it is. It's consolidating. It's likely to break out. But the index seems to be dragging it. Very odd. I'm not planning on monitoring stuff that I expect to go much higher that doesn't move that much in a day. But it's interesting for my analysis to also understand it today. And I'll readjust in my stop because I'm not going to give up 20 points when there's really no difference between where I put my stop. It invalidates. So if it invalidates below 364 and I've got my stop at 357.5, that's cool. Why would I put my stop at 340 and lose 17 points more and just say I knew that was going to happen? But at the moment, things are still intact, so that's just my worst case. My best case, I'm going to ride the gains. What's the point of taking a little win? This is a volatile stock anyways. So yeah, I'm just going to edit that part video and then we'll probably close up for the stream. No, did I copy the name by accident? Huh. Is this what we just did?
Okay, so we're giving a maintain trend, and then I'll be back soon to update you.
Yeah,
This
that's
whole
it.
video will be one anyway, so it'll be filmed over maybe a couple of days, weeks, months. Let's see how this plays.
Part 2.
I'll catch you guys soon.
Loki, somebody said that I look like a monk. What? Just because I'm wearing a thin element of clothing. It's actually very comfortable. Less strain on the back. Pulled the back muscle the other day. One of my friends. I didn't think he was heavy, but he was very heavy. Needed some help. Hurt himself. But I should have let the stronger friend lift more of the weight. See. UK government's action. Someone said here, Revolutionary Bar Group CEO. This was posted by Noah Ben Riley on Twitter. Friend of ours as well. Real cool guy. Spoke to him the other day. Have a lot in common. Noah said, well, he didn't say, but he quoted the UK government's action towards